Aditya, great to have you with us here. Thank you very much for your time. So what have you been doing, Aditya, at your fund? How are you dealing all of this up and down? It's mostly up, very little down. But yeah, your views.
Yeah, so thanks for having me on the show. I think so last time we spoke, it was more about, bottom-up stock picking. So the environment continues to be very, very constructive. What we are witnessing at this point in time is that, micro is obviously much better than macro. Obviously, there are some concerns about the bond yield differentials between US and India. It is at 380 odd basis points, the lowest in last 12 years. Clearly, we are in an environment of readjustment. So that theme continues to be there. I think so a lot of businesses are trying to find their foot in the door, because this is the first time wherein we are seeing such a high inflation environment. So our focus has been on categories wherein demand is holding up. And obviously, this is a very good time to stock pick because India obviously is the brightest spot within the emerging market. As we see, inflation differentials between India and the West continue to be at a reasonable level. I think so. We'll continue to be in a market wherein earnings growth, hopefully from Q4, should start to look up as the commodity price inflation tends to moderate, which has been the pain point for last 3 to 4 months. But in the interim, obviously, we have had many stocks which have rallied by 30-40% from the bottom. So it continues to be a reasonably constructive environment for bottom-up stock picking.
All right. Hi, Aditya. Good to speak to you. So you're hoping that earnings momentum continues and plenty of stocks out there that are finding favor. Aditya, with regard to the funds that you're managing, there are two sectors really. One is the cement space and one is the banking space. Hope of consolidation in both these two spaces, maybe in cement far more because you have a new player that's coming in there. Have you made any kind of additions in the banking or financials stocks, or maybe playing some part of these cement themes with disclosures?
Yeah, of course. We are very constructive on the CV financing space. That is where we have added a company known as Sundaram Finance. It has been a champion in CV lending. Our general framework has been to look at financial services from a perspective of AAA rated lenders who have got the previous cycle or many cycles right. Clearly, Sundaram is one of the best NBFCs to own in India. Just as extension of that theme, we see a lot of divergence within the financial space in the sense that we have small finance banks which are trading at anywhere in the range of 1 to 1.2 time price to book, and there are quite a lot of them who are trading in that valuation range. However, what we are seeing of late is that the ROAs are trending, or they have got a good chance of trending above 1.5%. They might also graduate towards being a 2% ROA bank, and this is where we are placing our bets on. So we see a lot of divergence. Obviously, we have seen the large cap banks delivering good return for investors, but we are very, very positive on the small cap finance bank space. On the cement side, consolidation obviously is a play going forward. But what we are witnessing at this point in time is that demand is something that should hold up here. Valuations are far, far constructive from a long-term average perspective. So we are positive on the cement space as well.
So that cement is the only thing in the building material space that you like, Aditya?
So we also like a segment known as wires and cables, right. Wherein we had invested into this company, which is a deep value play. It has got, which is known as Phenolex Industries. That continues to be a very constructive play for us from a slightly medium-term perspective. What we see again here is that, it is number 2 in terms of wire and cables market share, but the valuation disparity is huge if you look at, the market leader in this space known as Polycab. So we typically are finding opportunities from a bottom-up perspective wherein either earnings or cash flows are in a position to rebound. So essentially, we are playing a value strategy here, wherein multiples will get re-rated over a period of time.
All right, Aditya, what about the auto ancillary space? That's been buzzing around, OEMs as well as the ancillaries. You have made any changes out there? Sundaram Finance we've got from the the CV theme and the financing theme out there. What about the actual play? Autos, auto ancillaries, any changes you all have made?
So one theme that we particularly like as a house is a lot of B2B businesses, wherein we have not seen a lot of quality companies reporting a loss in last 20 years. Even during the time of global financial crisis, these companies never reported a loss. Now, what happened particularly in last 2 quarters was that these companies reported a loss because these were B2B businesses. They had contracts in place wherein they could have easily passed on the raw material inflation. Secondly, we have also seen some bit of semiconductor shortages impacting a lot of auto ancs. So we have invested into a company known as Higashi Motors, wherein it is a MNC. It is owned by 75% owned by the Japs. We believe that going forward, the company should do very, very well, because if you look at the peak stock price, it was like 1,000 rupees in 2017. The stock is deep value. We believe that they have added a new segment known as brushless DC motors, which should do very, very well. So typically the theme being that, essentially, when you are pushed to the wall in a down cycle, a lot of companies try to reinvent themselves. And this is where I think so a lot of B2B businesses fit in. So we are fairly constructive on B2B businesses, be it API or be it selected names like Higashi.
Aditya, you like the diagnostic space as well? That's a bit of a non-consent. The consensus is that there's huge competition and there's very little value, as pricing will continue to move lower for the most widely conducted tests because of competition. What's your view?
Yeah, so initial reaction, obviously, that is why you are getting these stocks, they have corrected anywhere to the 50-60%. Most of the companies have corrected. Our view here is that, the market will continue to grow. It is not very easy to establish a diagnostic business and be successful at it. If you look at, the new players that have been talked about, essentially they are outsourcing to the existing players in terms of getting the test. Second thing that we have noticed in the space is that, whatever pricing is being talked about by a lot of people is very, very selective. It is not, for the entire, it doesn't flow down to your entire, sort of the range of tests. So what we are witnessing here is that, multiples are very, very constructive. We have a B2B company which is very, very cheap. Obviously, we believe that going ahead, there is a combination of COVID business being behind us. Obviously, the focus here is non-COVID business. And what we have witnessed here, and we have witnessed some divergence in terms of trends here, that we own a company which is trying to grow the non-COVID business, and that is what we particularly like. So
as you said B2B.
Yeah, so we are focused on a B2B company here, basically, which is trying to grow the non-COVID part of it.
I mean, if you don't mind, can you tell us which one?
So it has been Thyrocare for us.
Okay.
We have been long-term shareholders in that company.
Right.
And then obviously there is a play on pharmacy integration as well.